Good morning, Mandy, and good morning, Steve. Yeah, effectively, it's a very complex environment out there. As you have noted, the extension of the duration of the supply chain is impacting free cash flow, while at the same time, inflations of all different nature is slightly impacting our operating margin. There's always something we can do to adapt. But at this point in time, our best tool is growth. As you can see that the company is growing, also driven by our connected businesses. So we still believe that innovation, bringing energy efficiency in an environment where the cost of energy is rising, is the right focus for us at this point in time. We also believe that we should see in the second half of the year an ease on the cost of our bill of material, after the big increases that we've seen in the past years.
That's good to hear that you feel that the second half will see an easing up of the cost inflation side. But what about the lead times for suppliers? Because you've said that your cash flow generation will normalise once those lead times shorten. What are the indications that those lead times are going to shorten anytime soon?
Well, that's a very good question. We were probably more hopeful at the beginning of the year than at this point in time. At the beginning of the year, we were seeing a recovery in the second half. But the Chinese situation has probably delayed, going back to normalcy, on the logistics side. We still believe that we have seen the bottom of it. We see vessels accuracy, slightly improving, still being at 36%, versus 80% before the crisis. So we are not there yet, but we see a slight improvement on the logistics side. We believe it's going to take us probably the first semester of 2023 to go to a situation which is going to be back to normal.
Eric, very good morning to you, sir. A man you know very well from your career as well. I was talking to Jean-Pascal Tricoire yesterday. He still believes that the digitization story, that the ESG story, that the turn into more renewable products is still very, very strong at the moment, despite the budget pressures globally that are building up as well. I presume you totally agree with that and think that your products fit into that sweet spot.
I totally agree with that. We see our connected businesses, we see all the businesses that are generating, a high level of energy efficiency are still having a very good traction. You remember that in lighting, we can save 50% of the energy costs linked to lighting, and if we connect it, it's going up to 80%. So this is a reality, and we see that these types of businesses still have a good traction. You may remember that we have brought to the market in Q4, and we now brought in Q2 a different form factor of a new LED lamp, which is helping to save 60%. More than existing LED lamps. So, the technology is also helping us to bring, good answers to the problem that the world had at this point in time when it comes to the energy prices. But yeah, I concur completely with these arguments.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.